just as a scene setter, Pete McGuire, CEO at XM.com, is live now for you. Peter, a lot of cynicism at this end of discussions around my table tonight. Are you ending your thoughts on this sort of washout from OPEC 2.0, believing it'll hold, or dream on?
Well, good afternoon, Carson and team. A couple of things need to be considered. First off, Carson, over the weekend we saw the Mexico, Oman, Azerbaijan and Russia. They're looking at about a 558,000 cut. If you take on board what the previous week and a bit where OPEC, you're talking over around about that 1.2 million. And if you look at what the hedge funds have done, Carson, this is the real interesting point. We've seen a reversal at the largest swing in 25 years from short positions to long positions. By the 6th of December, the hedgies had practically closed out all of their shorts and ramped up to the long side.
Some would say more fool them.
Well, yeah, but they've had a very good uptick, and of course, if you put your mind to the drillers and the shale producers, since the end of May, Carson, they're up 58%.
This target, though, that we're eyeing now, basically removing 46% of a stockpile surplus.
Yeah. That
demands full compliance. It's just unprecedented. So hedgies go long, saying full compliance. I mean, what are they on? What are they drinking?
Well, that's right. For the first couple of months, I think 17 is going to be fascinating how it plays out. If you look a little bit further to the latter part of 2017, we're heading into backwardation. In other words, the futures market, it's going to be cheaper the further out you go, and every month in 2018 is backwardation. So that shows that the market is anticipating cheaper prices after July, August next year, and the first 6 months are going to be fascinating how that plays out. As Francesco rightly said, can they keep to those compliance targets, Carson? Are they prepared to all sit around the table and say, yes, I'm going to, I'm up for 100,000, I'm sitting at 100,000? It's like a game of poker.
So just Peter, you add those rogue states in there, and then you add all the futures trading, you get a volatile market, don't you? We're going to overshoot the mark on the upside. You might think we're going past $60 and into 65, and it'll get start getting expensive, and then all of a sudden people say, oh, the oil price is expensive, well, let's start short selling again.
You're wasted. You should be at the UN, Francesco.
Yeah.
Oh, no, I'm too logical, maybe. I'm a realist.
No, Pete, you come in on that.
Well, I think you're right, Carson. Look, this is the whole issue. And can OPEC be trusted? Can non-OPEC be trusted? The first couple of months are going to be critical come January, February, March. If there are no weather outages, if there are no geopolitical concerns, then it's going to be a normal market. And I think the outlier is going to be if you see a major weather impact as far as Arctic entering the US, and there's talk of that as far as weather, then that could certainly have some effect to the market. But if we have normal weather conditions, Carson, then I think what we're going to see is, possibly a further uptick as far as price. Keep your eye on very much where the US dollar trades, but more importantly, what actually does happen with those producers and the rigs. And I think that the US shale producers will really come back into big time.
Just back on the hedging swing factor here. They were badly wrong on the short side. They've got overweight long. What makes you believe that they're any more sort of accurate on this trade than they were on the last one?
Okay, I think more importantly, you've seen, and if you look at it on paper, you've seen that activity from OPEC. They've put their hand on heart and said, right, we're cutting to a certain number. The same with the non-OPEC producers. And this time round, I feel as though that they'll live and they'll act accordingly to those numbers. Time will tell. Maybe Francesco's right. I'm going to give them benefit of the doubt for the first 60 days. And let's just see where we are the start of March, Carson.
So just to repeat, they have never, ever...
Yeah.
I mean, all the analysis, historical, can't be inaccurate on this front. They have never, ever fully complied.
No, that's exactly right. But this time round, I think we've got the Saudis prepared to play. We've got Russia. We've got a new government coming out of the United States. And it is a little bit of a different environment. More importantly, they're being paid in US dollars, and that's had a nice uptick. So if that can continue, let's just give them benefit of the doubt. As I said, the first 60 days are crucial. Start of March will be a decider.
Oh, yeah, Peter, it's Adam here from Shaw's.
G'day, Adam.
Just changing tack a little bit. Obviously, we've seen coal, iron ore, and oil run pretty hard.
Yeah.
What about some of the other base metals? Are you looking at anything zinc, nickel, aluminium, or anything like that?
Well, certainly, but I think more importantly at the moment you're looking at copper. Copper's had a great run. It's around about that 263, 264 cents a pound. Dollars per tonne metric, it's around about 5,800. I think it'll take out 6,200 quickly, probably gallop up to 6,400. Many of the analysts are saying you could see mid 6,500s. And you've had a very strong uptick with euro, China, and of course the US as far as building and infrastructure. And if that dollar gains momentum as long as Trump's there, as far as an infrastructure spend, then we could see further appetite, and you might even go higher than that, Adam.
But what do you think? I've had this discussion with a number of people. What do you think is the next commodity that's going to have some euphoria built into it? So in other words, the price just rallies on the back of just a lot of hot air. You know, I was talking to one guy on the program a couple of weeks ago. He was talking about uranium could be the next one. I had a chat with another guy in the office. He thinks cobalt. What are your thoughts on that?
Well, they're those rarer metals that, and you've got to, I think, understand as far as liquidity in the market and volume. You've got those outliers like cobalt, molybdenum, rare earths, and uraniums. They're hard to actually see a price. You've got to see, great demand coming through from different sectors of the market. They're not freely traded like on the LME or in New York. So whilst you take on board those, you have to also appreciate that those prices and those mechanisms for trading can quickly wash out. Whilst they can go up 25% in a short period, they can wash out 20% in a matter of days as far as trading. Just thinking of one to the right here is cocoa. The prices as far as confectionery, they're down 16% in the US over that 4-week period from October to November because of huge rains in the West Africa region. So just for the viewer's standpoint on that, those markets can be quickly moved due to Mother Nature, and there's an example with cocoa, which is going to be far cheaper for Christmas versus the likes of uranium and cobalt.
Okay, go outside briefly, the industrial commodities, just talk to, chatter around drought, farmers, and net impact. This is an Australian connection, but bigger picture, where are you sort of seeing the most upside potential on a soft commod front now?
Well, I think, Carson, I've got to maintain that view that we mentioned over the last couple of weeks, which is wheat. I think that's going to have a very, very strong run over the next, say, 6 months. It's been been nice. It's rolling along very nicely as far as global consumption, and of course the production has been very, very strong. So I think that will continue, and that's really one that you need to keep an eye on. It's going to affect Australian farmers here, and it's also going to be a boon for the US. So I think global consumption and as far as production is looking, wheat's certainly going to be one to keep a close eye on.
Yeah, GrainCorp's looking pretty good at the moment. I don't know if you've seen the chart on that one, but yeah. It actually is starting to look quite good, and that sort of goes in with your comments there, Peter.
Thank you, Adam.
All right. Finishing incidentally unchanged today, but yep, there you go.
Did look good this morning.
A lot of things did actually, and then they sort of wound the dial back. Thank you, Pete. Have a good rest of your week. Pete McGuire, XM.